Who really needs life insurance? Hey champs, welcome to the MoneyMind Quest. Today we're diving into life insurance and its essential role in financial protection and wealth management. If you're committed to making smart financial choices, stick with us until the end to take the financial literacy test, and don't forget to join the MoneyMind Quest champs by smashing that subscribe button. Ready to enhance your financial savvy? Let's get started. Let's take a brief journey through history. Did you know life insurance originated in ancient Rome? Back then, soldiers created burial clubs to ensure funeral expenses were covered for their comrades. Moving forward to the 18th century, modern life insurance began to develop in England with the Amicable Society. By the 19th century, it had spread to America, becoming the comprehensive financial tool we recognize today. Generally, life insurance falls into two main categories: term and permanent. Term life insurance provides coverage for a specific duration of time, such as 10, 20, or 30 years. It's simple and usually more affordable, but if you outlive the term, there's no payout. Conversely, permanent life insurance offers lifelong coverage and includes a savings component. Let's explore the types of permanent insurance. The options are whole life, universal life, and index universal life. Whole life insurance is a type of permanent life insurance that provides coverage for the entirety of the policyholder's life as long as premiums are paid. It features fixed premiums and a guaranteed cash value that grows over time. Some whole life insurance policies offer dividends, which are returns of excess premiums paid to the policyholder. These dividends can be used in various ways, such as to reduce premiums, purchase additional coverage, or be taken as cash. However, not all whole life insurance policies come with dividends. Only those from participating insurance companies typically do. Universal life insurance is a form of permanent life coverage that allows for flexible premium payments and the ability to modify the death benefit. Unlike whole life insurance, which has fixed premiums, universal life allows policyholders to vary their premium payments and alter their death benefit as their financial needs change. The policy includes a cash value component that grows over time based on interest rates set by the insurer or the type of funds in it. This flexibility makes universal life insurance an attractive option for those who want more control over their coverage and investment. Additionally, policyholders can borrow against or withdraw from the cash value, providing a potential source of funds for emergencies or other financial needs. However, universal life insurance typically does not come with company dividends, unlike some whole life policies. Index Universal Life (IUL) insurance is a type of permanent life insurance that offers flexibility in premium payments and death benefits while linking the cash value growth to a stock market index, such as the S&P 500. Unlike traditional universal life insurance, IUL policies allow policyholders to potentially achieve higher returns based on the performance of the chosen index, though the returns are typically capped. Additionally, IUL policies provide a guaranteed minimum interest rate to protect against market downturns. It's important to note that not all IUL policies include company dividends. Instead, the growth is primarily driven by the index performance and the policy's crediting strategy. Generally, life insurance plays a crucial role in enhancing personal finances by providing a safety net for families in the event of the policyholder's death. It serves as a practical means to ensure financial security by replacing lost income, covering debts, mortgages, and funding future education expenses. The DIME method is a useful framework for determining the appropriate coverage needed. The acronym represents D, which assesses debt obligations, I for income replacement needs, M for mortgage payments, and E for education and other expenses costs. By evaluating these factors, individuals can tailor their life insurance policies to adequately protect their loved ones from financial hardship, thus securing their future against unexpected events. In addition to the death benefit it provides, life insurance that includes cash value can serve multiple financial purposes. It offers creditor protection, ensuring that creditors can't claim the cash value or death benefit as long as the beneficiaries are among the protected class, which usually includes spouses and children. This is crucial for safeguarding your wealth. Moreover, the cash value grows tax deferred, and you can borrow against it for emergencies or opportunities. It's vital to tailor life insurance to your specific needs. A one-size-fits-all strategy can be risky. Everyone's financial situations and goals vary. Be sure to take the financial literacy test at the end of this video. Let's clear up some misconceptions. Many believe that life insurance with cash value is a poor investment. However, with the nature of life insurance, it's not intended as an investment, but as a foundational financial asset. It is important to mitigate against probate expenses, as well as taxes triggered by deemed disposition of assets like houses when the first owner dies and the properties change ownership. The deemed disposition principle refers to a tax concept where an asset is treated as if it were sold or transferred at its fair market value, even if no actual sale or transfer has occurred. This principle is commonly applied in situations such as inheritance, where beneficiaries may inherit assets at their fair market value, resulting in a step up or step down in the asset's tax basis from the deceased's original acquisition cost. It often applies to children inheritance as well. So to the famous school of thought that term life insurance is preferable because it is way more affordable, you need to consider the fact that over 97% of term policyholders never receive a payout because their policies often expire before a claim is made and the policies cost a lot more at the end of the term. In contrast, permanent life insurance offers lifelong coverage and is more likely to receive a payout. Another myth is that insurance companies can fail, leaving you with nothing. While companies can indeed fail, the industry is highly regulated and most policies are supported by state guarantee associations up to certain limits. This generally ensures the safety of your policy. Contrary to another common misconception, universal and whole life insurance policies with cash value can indeed pay the death benefit along with the accumulated cash value, depending on how the policies are structured and its terms. Some of these policies offer the dual benefit of a death benefit for beneficiaries upon the insured's death and a cash value component that accumulates over time. Though the cash value may be reduced by outstanding loans and withdrawals, policyholders can access this cash value during their lifetime for various financial needs, such as supplementing retirement income, funding education expenses, or using its collateral for loans. This flexibility makes these policies attractive as long-term financial planning tools, providing both protection and potential financial growth while alive. These policies may be subject to some conditions, so policyholders should always review specific terms and consult with a financial advisor to fully understand how these policies work and whether they align with their financial goals. Why do large corporations use life insurance with cash value? They benefit from its tax advantages and stability. Companies utilize these policies to fund executive benefits and as a source of liquidity. It's a strategic tool for financial stability and growth. The tax-deferred growth of cash value within these policies offers financial flexibility and potential advantages in estate planning. By leveraging life insurance with cash value, big companies can effectively manage risk and optimize their financial portfolios without solely relying on traditional investment vehicles. Corporations appreciate the value of life insurance in diversifying their assets and providing a financial cushion. How does life insurance fit into your financial foundation? It's not just about the death benefit. It's about creating a secure financial base. Think of it like building a house. You need a solid foundation to support everything above it. Life insurance is that foundation, providing protection and stability. When it is well structured with a personal design specifically meeting your needs, it can be very impactful. By securing your financial base, you protect your investments and assets, allowing you to focus on growth. Deciding whether to obtain life insurance hinges on individual circumstances and financial goals. For many, securing life insurance is prudent, with the type depending on needs. Term insurance is ideal for short-term financial obligations like debts and specific expenses with defined timelines. It offers straightforward coverage for a set period, ensuring financial commitments are met if the insured passes away during that time. It's particularly suitable for covering a mortgage, safeguarding family members from losing their home due to outstanding loans. Unlike bank mortgages that protect lenders, personal life insurance policies can ensure that beneficiaries receive necessary financial support directly. Tailoring life insurance to individual needs is crucial, as it ensures coverage aligns precisely with financial obligations, long-term goals, and dependents' needs, providing peace of mind and financial security tailored to personal circumstances. Remember, achieving financial freedom starts with a mindset dedicated to learning and establishing a strong foundation from quality information. So don't forget to stay curious, stay wealthy, and join the MoneyMind Quest champs by hitting that subscribe button. Be sure to take the financial literacy test using the link in the description below to help you improve your personal financial management skills. Check out this video for more tips and see you next time, champs.